It is possible to find cheap stocks even in today's market, and 3 of them are moving higher after a Barron's recommendation. I'm Jack Otter, editor of Barron's.com. I'm here with Jack Howe, senior editor at the magazine. It's all about retail as we look at 3 picks in the magazine, 2 of which at least are jumping really nicely. Let's start with Barnes & Noble Education. Not a big company, but an interesting little nugget.
Well, this was a piece of the the big nationwide bookseller. This, of course, focuses on campus bookstores, selling books, renting books, and you also have the campus gear, the sweatshirts, and so forth, and that's high-margin merchandise. So Andrew Barry writes about this company that this is a niche business, pretty good margins. They're investing some in technology right now, which is holding down margins for the moment, but this, at some point down the road, it could be an acquisition target. You could easily, think of a few companies that might want to, with a small price to pay, get a larger presence on campuses around the country, and this might be a company that would appeal to them.
Amazon, Apple would be 2 obvious potential purchasers.
Right.
And was it $600 million market value?
Cheap. That's
so it's
nothing
for these guys. And interestingly, Andrew compares it to Cheggs.
Right.
That's a wonderful name, which has 20% of the revenue, but sells at a much higher multiple. And that's because it's got that internet sex appeal. Barnes & Noble sounds boring, so you've got a cheap stock here.
Exactly. Yeah. All the economic might at a much lower price.
Let's move on to another retailer. This is Dick's Sporting Goods. These are nice stores. They're always clean, big, good selection, but they got hammered because they had too many golf clubs at a time when, understandably, Jack, people just don't want to play that game.
I don't get it, first of all. People are out of their minds for not loving that sport. I think what's going on here is that, and I'm paraphrasing, we're just all fat and lazy and we don't do anything anymore as far as sports-wise, but we do like to wear athletic clothing. Right?
Exactly.
So I think Dick's has figured it out now. They want to push more apparel and footwear through the stores, and they're displaying those things more prominently, and it's working. They're overhauling the stores with these in-store things where you get more merchandise from like Nike, or I think Ralph Lauren has a sports line that they're pushing now, and so that's doing good things for sales. And those numbers, I believe we've reached the anniversary of that sort of negative patch for the golf numbers, and so there are better days ahead, it looks like, for Dick's, and it's a reasonable valuation. This is also, by the way,
about 12 times earnings.
Yeah, and this is another example. We've seen a lot of this of retailers making more investments in what they call omni-channel retailing, where they're taking control of their website. It's not just about e-commerce. It's about being able to quickly shift inventory from where it's not selling well to where it is selling well. So if yoga pants are really going crazy in Minneapolis, then you move them over there from, let's say, Orlando, where they're not selling as well.
But what a great opportunity for retailers. So it used to be a Dick's or a Modell's or whatever could only sell to people who were actually being athletic.
Yeah.
But now everybody wants to wear the stuff. I mean, that doesn't happen very often.
We're all athletes without the actual exercise.
Yeah, exactly. And I'm sorry, but I'm going to divert here. Total random story. I'll try to make it quick. I love Dick's. I'm taking my son to a birthday party at a Six Flags Great Adventure.
Yeah.
You got to meet in the parking lot at the right time or the kids are going to be gone.
Yeah.
He barfs all over the car and himself. We had to run into Dick's. I just said, give me whatever you got on the sale rack. We dress the kid right there. I get him to the party on time. I'm always thankful to Dick's for that
That's
moment.
a success story.
Exactly.
We like to put those out there when we can.
Sorry for the diversion. Now quickly on to DSW Shoes, our third retailer. This one's up about 1% today. By the way, Dick's is up 4%. Barnes & Noble's Education's up 6%.
Yeah.
DSW up 1% on a Dave Englander story.
Well, this stock was a growth stock for many years. It's really gotten pounded this year. This is another example of what we were just talking about, is a company that's investing money in their e-commerce and omni-channel retailing, again, to make the merchandise turnover more efficient. When you do that in the short term, we talked about this back when we wrote about Ralph Lauren. In the short term, that depresses your earnings, depresses your margins, makes it look like things are moving in the wrong direction. But down the road, that actually pays off in higher profitability, so we'll see if it works here, and it's a pretty cheap stock.
Englander points out, back out the cash is selling for about 10 times earnings. In this market, that's hard to find.
It is.
Thanks, Jack.
Thank you.